Hey, bulls and bears. Well, the phony CPI numbers are out. Consumer Price Index, what most people look at as far as what inflation is, the cost of living. Well, we know that it's a very flawed number. It leaves out a lot of things that people have to pay for. Let's just name a couple: homeowners association fees going up, insurance rates going up like crazy. I talked to clients here just this week, clients that see their home insurance bill $3,000, $4,000, $5,000 a year increases from the previous year of 20, 25%, 35%, 40%. Crazy off the chart rate increases that we've seen in some of these things. Of course, not reflected in the CPI number, but we still have to look at the CPI number because that's what's reported on out of the mainstream business networks and the news channels that 99.9% of the people look at, and unfortunately still believe those numbers. So we still have to talk about them because those are, the numbers that people are actually paying attention to. But we know it's not good. Now they're saying that this is great news. The stock market took off on the optimism that one, that we're done hiking rates, and the markets are even pricing in rate cuts next year, right? We'll talk about that later in the video. Emergency rate cuts are on the way, absolutely. But let's talk about these numbers here, the CPI numbers that are out here. And let me just bring this up here. Articles like this: inflation slowed to 3.1%. Sounds like good news on the surface, right? This is, of course, the November numbers. Inflation slowed. Is that positive or negative? Well, it's actually negative because prices aren't coming down. Prices are still going up. They're just going up at a slower pace. That's what they mean by inflation slowed, right? So this is not good news at all. This is the year over year number, 3.1%. That excludes what they call volatile items like food and energy. People have to pay for food and energy, so why are we excluding those, right? Doesn't make any sense. But think about it. Prices are still going up. We're in a bubble. We're in a cost of living bubble, a housing bubble, lots of different bubbles. And we need prices to come down. We need a negative number. So anything but a negative number in this is bad, bad news. Now, when you go over and look at the month over month prices, that gives us even a better snapshot, in my opinion. We were up 0.1% in November compared to October. And when you look back over the last year, we only had 1 month that we didn't see prices increase versus the previous month, and that was October here, coming in at 0%. All right, so things are getting more expensive. The consumers definitely not out of trouble. In fact, the consumers going to be getting into more and more trouble as we move forward here, and there's going to be a breaking point, and they're going to have to re-implement a lot of these emergency rescue programs that came out in 2020. Will something big pop off, so to speak, that would give justification to these types of rescue programs? Well, it's very likely. If we look what's happening across the globe right now, we see the threat of war here on U.S. soil exploding as we get involved in many, many different conflicts. We have the U.S. Not just involved, but actually being attacked. Some of the bases in some of these other countries are actually under fire and being attacked, right? So we have a lot of things going on. We see that China is involved in some sort of attack on our grid. I just talked about that in the previous report. And we've got a big uptick, as I predicted here, big uptick in these types of threats happening. Will it be the power grid? Will it be the banking system? Will it be, who knows what's going to go dark? I mean, things are very, very risky right now. Now, it doesn't mean that the stock market's going to crash. Some people are out there saying that I predicted a stock market crash. Ultimately, yes, there's going to be some big, let me just say, thing that's going to pop off, just so I can stay, stay within the confines of the rule makers here. Something big is going to pop off. It's going to bring the market down like you've never seen before. But until then, we're going to see a massive, massive short squeeze. In fact, what we just talked about, a couple months ago, saying that we're going to see new all-time highs in the stock market. Remember, they can bring these markets to an all-time high at the click of a mouse. When I talk about they, I'm talking about the people with access to endless amounts of digital money at the click of a mouse. And that's what our money has, I shouldn't say evolved, that's what our money has become, uh, digits on a screen, basically, right? So when you have people out there with access to billions of dollars at the click of a mouse, you can see things happen that make absolutely no sense. Or do they make sense? When you look at the stock market, we'll talk about the stock market here, but here's a statistic for you here. The Dow Jones, the third highest close of all time today, that happened. The third highest close of all time. I expect the stock market to go to all-time highs, right? Um, so again, no crash. People saying that I predicted a crash, they may be reading one of my headlines on some of my videos. What I do sometimes on these headlines is I'll put what an investor said or what someone else said, because that's the kind of thing that catches people's eye. But then if you hear my commentary, in my opinion on what these other people said, I've always said here that there's not going to be a crash, this soon. Now, ultimately, yes, because we're headed into some very, very troubling times, and I think we're going to see some big things pop off. Now, when we see something big happen that brings the markets down, what type of money printing are they going to come in with? What type of rescue are they going to come in with, right? We saw a 40% drop on average in the Dow Jones and other indices back in 2020 with the onset of the health crisis, plunging oil prices, but it surged back up very, very quickly, right? So these deflationary things, don't stay deflationary for long before they come in with new massive rounds of quantitative easing, liquidity injections, money printing, spending packages, rescue packages for the U.S. consumer, with the cancellation of loan payments, cancellation of foreclosures, evictions, you name it. All those things I think are on the table again to happen. They don't want deflation. The powers that be, they don't want the cost of living to go down. They want the cost of living actually to go up, I think. But as you see the U.S. consumer getting closer and closer to the financial edge with the savings rate close to 40-year lows, they have to be very, very careful. And that's why we're not seeing any more rate increases, even though the central bank hasn't met their goal or their target, which would be 2% inflation. Now, even 2% inflation is not good. When prices are too high, we don't need prices to go up more, 2% a year, which is better than the 3 something percent. But we need prices to come down. We need a crash. We need a correction. It's very unlikely they're going to allow that to happen, or if it does happen, it'll be very temporary, like in 2020. Came down very quickly, but also recovered very quickly with the massive amount of money creation, money out of thin air. Well, let's get into this article right here. So, question. And first, here's something that people often say when I talk about the cost of living. Well, it's fine, JJ. The cost of living is fine. It's no problem as long as people get wage increases to match the cost of living. Well, it's not fine. Think about this. If people were getting wage increases to match the cost of living, why are we seeing record numbers of people working 2 jobs? Here's one of these articles out of CBS that points this out. More Americans are working 2 jobs. All-time high right now of people working more than 1 job. And a lot of times it's worse. People are working multiple jobs, plus working in the gig economy, side hustles, things like that. So again, if wages were matching this rising cost of living, why do we have this record-setting people working multiple jobs? Here's another one here. More than 1/3 of American workers turned to freelance jobs in 2023. Freelancers say they're seeking extra cash and more flexibility, but the main thing is extra cash. Do people want to work more because it's fun? No, I don't think so. I think more people want to work less versus more. Who wants to work more? I mean, I guess if you really love your job, you want to work more. But most people that I talk to, probably 90+%, if they get time off, they'll take the time off instead of actually having to work. So it's very interesting that we're seeing how this is being reported and how people are viewing this as a positive thing. But again, when you look at the markets, it's the top 10% that control the stock market. They own close to 90% of all stocks. We're talking about the hedge funds, the millionaires, the billionaires. And this is also a way for corporate America to get rich. We have companies out there, instead of taking the profits and giving people bigger raises to not just match the cost of living, but maybe raises to outpace the cost of living. Wouldn't that be nice? But no, instead of doing that, they're buying back their own stocks. Not all of them, but a lot of them buying back their own stocks. They are giving huge awards to the upper level executives, the CFO, the CEO, and not only huge bonuses and wage increases or salary increases, but also stocks. They award stocks, and that's one of the reasons why you see all these enormous amounts of buybacks. So think about this: we've got 10% of all companies out there, approximately, are zombie companies. That means they're not making enough to pay off their debt. The only way they can keep going is to borrow more and more and more, or continually roll over the existing debt. Well, that's becoming more and more difficult in a higher interest rate environment. So that's why we're seeing the number of corporate bankruptcies this year on pace to match or eclipse what we saw in 2020. Now, the latest numbers that I saw, we're going to be just under where we were in 2020. Of course, we haven't seen the end of the year yet, so we'll see what happens in the last few weeks here, last couple weeks. But right now we're on pace to be below where we were in 2020, but not much below. When you see the final numbers, I think a lot of you are going to be kind of shocked and surprised by it. And it's true, they do not want prices to come down. They want people living paycheck to paycheck. The more debt people have, the more easily they'll go along with whatever's thrown at them, right? So imagine if they come out with this digital currency and they promise everyone debt forgiveness. People will jump into that digital currency so fast it'll make your head spin. And here's something else: we're going to see mortgages get longer and longer. A real estate mogul's out there, Grant Cardone, not sure if it's Cardone or Cardone, doesn't matter. Here's his prediction: America will become a renter nation. Warns the U.S. will likely see 100-year mortgages here in the very near future. He's talking about before 2035, so like right around 10 years. He says we might even rent our clothes. So here goes the whole "you'll own nothing" push, that we see coming from the top down, basically. So wow, I believe that they will extend the terms, and where people will just rent for life. Even if you pay your home off, you're still are not free and clear. You still have to pay all these other expenses. Taxes never stop. So this is not. I don't think this is the way that so-called capitalism or free markets were supposed to be functioning. And this is malfunctioning, in my opinion. Not only malfunctioning, well, I shouldn't say malfunctioning, because this is working exactly how a select group of people intended. And these, again, are the people at the top 10%. And as we go into the future, we continue to see the wealth gap or the wealth divide get bigger and bigger and bigger. Some people think it's just a coincidence. Folks, that's the way this whole thing was designed, right? You can work your whole life and not make as much as somebody that just can just click a mouse and create all this money out of thin air. We're talking about the bankers. Easy money, 0% money, loaning it out at 10, 20, 21, 22%, and even higher in some cases. If you're late on your credit card, they'll bump it up to what the max ceiling of 29%. Who knows? They could have raised it higher since I last looked at it. Now let's talk about this price of silver for a minute. The beatdown we had in silver. Now silver went up going back to October. Just bringing up a chart here so I can get the numbers. Going into October, we were just about $21, actually just under $21. Went up to $25 in less than 2 months. And then we saw a huge drop off just in the past couple weeks from over 25 down to just about $23. It fell under $23 for a minute. So why would something go up and up and up for close to 2 months and then take an elevator down, right? Staircase on the way up, then boom, huge drop off. Is that people like you and me selling our physical silver to the pawn shop or back to the bullion dealer? No, that's big money with computers, digital money. They can short these prices down. This is not the real physical price. You can't get the physical price, or you can't get the physical metal for what they're saying the price is, right? So you have to keep stacking, in my opinion. Physical metal, that's going to be the best thing. Silver, I still think is the best. When you look at back in the 1980s, we had what, $50 silver before that got pushed back down. We had banks out there basically admit they got caught shorting these prices, manipulating the prices. They paid a fine, and that they continue to do it. They get to keep doing it. So that's the crazy world we live in, right? So uh, at some point, it's got to change. There's going to be something that breaks, that pops off. Just be ready for it, right? Things, look like they're never going to change until they do. Look back at what happened in the stock market here. After every downturn, pretty much, you witnessed all-time highs just about every time. The 2000s, the dot-com bubble and the bust, financial crisis, 2008, all-time high stock market, then boom, the drop. Now we're headed to all-time highs again, and what's going to be the panic, and what's going to be the situation that's going to make this come down? That's going to make all the big money investors that control the markets sell off. Well, I think first of all, they're going to short squeeze everybody that's trying to short this. They're going to squeeze them out, make them cover their shorts, and basically come in and take their money. That's what I think is going to happen. So we're going to see a huge wealth transfer. I think we're going to be on the right side of this because we're prepared. You have cash, emergency expenses out of the system, or emergency funds, cash out of the system. Food, water, you're ready for this thing to come down. How long is it going to take? That's the question. We'll see. Everybody be ready. Keep stacking. We'll talk to everybody very soon. Thanks for your support here in this channel. Come back for more news. Please subscribe. Give us a little boost by doing that if you would, please. Thank you so much, everybody. Bye for now.